All right, many of you have been following along on the progress with the whole family banking thing, the Bank of Mangoes, which we recognize is not really a real institution. However, it really is something that we're working on in my own family to use as a tool to talk about money, to get smarter on our habits, to really expose my kids to what to expect when they get to the real world. We're trying to arrange for monthly meetings, and during those meetings, we have discussions about money. All right, what does a bank do? For the most part, banks take in money for people, like deposits, and then they are lenders of that money to other people. Why can't we do that for ourselves? Banks profit. Clearly, banks are very profitable. Otherwise, you wouldn't see them as often as you do. Everyone's got a need for one. But why don't we just profit from ourselves when we need to use money? It's just a matter of funding a supply of money that we can access, right? So if we can get over that hurdle, this could work. At the end of our last meet with the family, we're seated around the table, having a good time and getting smarter. Any good meeting should end with what happens next, right? So we took our takeaways to be, my little one was going to explain what interest is. And I wanted her to break down simple interest, which is what interest is, and explain compounding interest. I wanted her to research this and understand, and then present back to us the next meeting. My oldest had an assignment as well, and her assignment was a bit different. It was talking about what is an interest-only loan versus what is an amortized loan. I wanted her to see how payment terms could look different, how amounts could be adjusted depending on how a loan is structured. So through all that, they both came back to us and presented, and we asked questions, and it was engaging. We're going to keep reinforcing the concepts, but nobody explained to me when I was 10 years old what interest was. Nobody explained to me what compounding could do. Nobody explained to me what an amortized loan even meant. So we're going to look at it from many different angles, and we'll take it slow, but we're reinforcing the concepts. And then I got to really show them. I mentioned in our first meeting that I took out a loan to fund some wheels for the car, and I'm paying it back. And then I got to demonstrate and show them, here's all the payments that I've made. So it's going back in, as you can see. I made a promise and I'm paying it back. And I got to show them how that looks like on our bank, which is at Wealthsimple, which is, if you don't know, it's an amazing bank. I'm happy to chat about that. And got to show them what it looks like on the document, because I have an agreement with myself for a loan and I'm tracking all the payments. So family banking is going to evolve, and it's going to get larger and larger. And we're going to capitalize on all of that money that we're not paying to an actual bank. We're paying it to ourselves, and that's just going to go in one direction, bigger and bigger. There are several rules, but we really have one large rule. This bank cannot be used for spending. It can only be used to borrow to pay back. Not like the rest of our accounts where we spend what we spend and there's no real obligation to pay it all back. No, this one here, absolutely, everything that comes out of there has to be paid back. It's progressing, it's slow and steady, and I'll keep you current on how this is working out and how you too can implement this in your family. Now go on, get wealthed up.